Question 1. Understanding policy structure. Which of the following statements accurately describes a convertible term life insurance policy? A. A convertible term policy allows the insured to convert their term policy to a whole life policy without evidence of insurability. B. A convertible term policy can only be converted at the end of the term period, requiring the insured to provide updated medical information. C. A convertible term policy offers coverage that decreases over time, making it unsuitable for long-term financial planning. D. A convertible term policy cannot be renewed, as it automatically expires after the initial term. Answer A. Explanation. A convertible term life insurance policy is designed to allow the policyholder to convert their term coverage into a permanent policy like whole life insurance without the need for evidence of insurability. This feature is beneficial for policyholders who may develop health issues that could make them uninsurable later on. Option B is incorrect because conversion can happen at any point during the term, not just at the end. Option C misrepresents the nature of a convertible policy, which can remain level or may even offer a permanent coverage option upon conversion. Option D is incorrect, as many convertible term policies allow for renewal at the end of the term. Question 2. Regulatory framework. In Ohio, which of the following is a key requirement for life insurance agents when selling term life insurance policies? A. Agent must provide a detailed summary of the policy's benefits and limitations in writing to the client prior to sale. B. Agents are not required to disclose any financial interests they have in the insurance products they recommend to clients. C. Agents can offer term life insurance without a license as long as they have completed a training course. D. Agents must encourage clients to select the lowest premium option available regardless of coverage adequacy. Answer A. Explanation. According to Ohio's regulatory framework, life insurance agents are required to provide clients with a written summary of the policies, benefits, and limitations before the sale. This is part of consumer protection laws aimed at ensuring transparency and informed decision-making. Option B is incorrect, as agents must disclose any potential conflicts of interest. Option C is false. Agents must hold a valid license to sell insurance products, regardless of training. Option D contradicts the ethical standards requiring agents to ensure that clients choose coverage that meets their needs, not merely the lowest premium. Question 3. Scenario-based question. Mr. Thompson is a 45-year-old non-smoker who is considering purchasing a term life insurance policy. He has a family history of heart disease and is currently in good health. He wants to ensure that his family is financially protected should anything happen to him. What factors should Mr. Thompson consider when determining the appropriate coverage amount for his term life insurance policy? A. Only his current income, as that is the primary factor in determining life insurance needs. B is financial obligations, including debts, future educational expenses for his children, and current lifestyle needs. C, the maximum coverage amount offered by insurance companies without regard to his financial situation. D is age and the insurance agent's recommendation, as these are the only relevant factors in selecting coverage. Answer. B, explanation. When determining the appropriate coverage amount for term life insurance, Mr. Thompson should consider various factors related to his financial obligations and family needs. This includes evaluating his current debts, such as a mortgage or loans, future expenses like college tuition for his children, and ongoing lifestyle costs that his family would need to maintain if he were no longer around. Option A is overly simplistic and ignores other critical financial responsibilities. Option C disregards personal financial circumstances, as the right coverage should align with Mr. Thompson's specific situation rather than just the maximum available. Option D is misleading because while age and agent recommendations can influence decisions, comprehensive needs analysis is essential for determining appropriate coverage. Question 4. Claims process. In Ohio, which of the following best describes the process an insurer must follow when a term life insurance claim is submitted? A. The insurer has 30 days to deny or approve the claim after receiving all necessary documentation. B. The insurer can delay payment indefinitely while conducting a claim investigation. C. The insurer must notify the beneficiary of any denial within 15 days of the claim submission, along with the reasons for the denial. D. The insurer is required to pay the claim immediately upon receipt of the death certificate, regardless of any other investigations. Answer. C. Explanation. In Ohio, when a life insurance claim is submitted, the insurer must notify the beneficiary of any denial within 15 days if the claim is denied, including a clear explanation of the reasons for the denial. Option A is misleading as the claim process may involve more than just documentation and the insurer typically has a longer period to investigate. Option B is incorrect. Insurers cannot delay payment indefinitely without justification as they are obligated to handle claims promptly. Option D is inaccurate because while the death certificate is crucial, insurers may need to conduct an investigation to verify other factors before payment. Question 5. Underwriting and risk assessment. Which of the following factors is NOT typically considered during the underwriting process for term life insurance in Ohio? A. The applicant's occupation and lifestyle habits. B. The applicant's previous insurance claims history. C. The applicant's personal beliefs and values. D. The applicant's medical history and current health status. Answer. C. Explanation. Underwriting for term life insurance typically involves evaluating factors such as the applicant's occupation, lifestyle habits like smoking or engaging in hazardous activities, previous insurance claims history, and medical history. Option C is correct as personal beliefs and values are not standard criteria for underwriting decisions, although they may indirectly influence lifestyle choices. Options A, B, and D are all relevant considerations that impact the risk assessment and premium determination. Question 6. Ethical considerations. Which of the following actions would be considered unethical for a life insurance agent in Ohio? A. Suggesting additional riders to enhance a client's coverage after discussing their needs. B. Encouraging a client to purchase a policy that offers the most commission for the agent rather than what is best for the client. C. Disclosing all fees and costs associated with a policy to a client before the sale. D. Advising a client to review their policy regularly to ensure it meets their current needs. Answer. B. Explanation. Encouraging a client to purchase a policy that primarily benefits the agent through higher commissions rather than aligning with the client's best interests is considered unethical behavior. It violates the duty of care that agents have towards their clients. Option is ethical if done with the client's best interest in mind. Option C is a requirement under Ohio law and ethical standards. Option D promotes good practice in client relationship management and is ethical. Question 7. Types of term insurance. Which statement accurately reflects the nature of a decreasing term life insurance policy? A. The coverage amount remains level throughout the term, providing consistent protection. B. The coverage amount decreases over time, typically aligned with a declining financial obligation such as a mortgage. C. The premium payments increase each year while the death benefit remains constant. D. The policyholder can only change the coverage amount at the end of the term without undergoing medical underwriting. Answer. B. Explanation. A decreasing term life insurance policy is specifically designed to have a death benefit that decreases over the term of the policy, which often corresponds to a declining financial obligation like a mortgage. This type of policy is useful for individuals wanting to match their insurance needs with liabilities that decrease over time. Option A incorrectly states the nature of decreasing term policies. Option C mischaracterizes the premium structure, which typically remains level, while the benefit decreases. Option D is incorrect. Policyholders often have options to adjust coverage during the term subject to the policy's terms. Question 8. Financial planning. Mr. Garcia is evaluating his term life insurance options. He has 2 children, ages 8 and 10, and wants to ensure they are financially secure in case of his premature death. What should Mr. Garcia consider when determining the length of the term for his life insurance policy? A. The minimum term available, as low premiums are more important than coverage duration. B. The expected time until his children are financially independent, factoring in their education and potential living expenses. C. The length of his current employment contract, as this is the only relevant time frame for insurance needs. D. A longer term than needed to cover potential future liabilities, as it offers the best value regardless of changing needs. Answer. B. Explanation. Mr. Garcia should consider the length of time until his children become financially independent, which typically includes planning for their education and living expenses. This approach ensures that adequate coverage is in place to protect his family's financial future until they are self-sufficient. Option A overlooks the importance of appropriate coverage duration. Option C is too narrow as it focuses only on employment, neglecting family obligations. Option D could lead to unnecessary costs, as term lengths should align with actual financial needs rather than being excessively long. Question 9. Coverage needs assessment. Which of the following methods is most effective for determining the appropriate amount of term life insurance coverage for a client? A. The multiple of income approach, calculating coverage as 10 times the client's annual income. B. The needs analysis approach, which considers all financial obligations and future needs. C. Simply recommending the maximum coverage available under the client's budget to ensure ample protection. D. Assuming the client needs coverage equal to their mortgage amount only. Answer: B. Explanation. The needs analysis approach is the most effective method for determining the appropriate coverage amount, as it takes into account the client's entire financial picture, including debts, living expenses, future education costs, and any other financial responsibilities. Option A provides a generalized formula that may not suit every individual situation. Option C might lead to excessive coverage without considering specific needs. Option D is overly simplistic and ignores other critical factors in financial planning. Question 10. Riders and endorsements. Which rider would best enhance a term life insurance policy for a policyholder concerned about potential disability affecting their ability to pay premiums? A. Accidental death benefit rider. B. Waiver of premium rider. C. Child rider. D. Terminal illness rider. Answer: B. Explanation. The waiver of premium rider is designed to waive premium payments if the policyholder becomes disabled and is unable to work. This ensures that the policy remains in force during a challenging time without financial strain on the insured. Option A is focused on accidental death and does not address disability. Option C provides coverage for children but does not help the policyholder with premium payments. Option D offers benefits upon a terminal illness diagnosis but does not prevent premium payments during a disability. Question 11. Regulatory framework. Which of the following best describes the primary function of the Ohio Department of Insurance regarding term life insurance policies? A. To determine the premium rates for all term life insurance policies sold in Ohio. B. To oversee the licensing and conduct of insurance agents to ensure compliance with state laws. C. To guarantee all life insurance policies against insolvency. D. To set the minimum coverage limits for term life insurance policies sold in Ohio. Answer: B. Explanation. The Ohio Department of Insurance primarily oversees the licensing of insurance agents and ensures compliance with state laws and regulations related to insurance practices. This includes monitoring agents' conduct and ensuring consumer protection. Option is incorrect, as the department does not set specific premium rates. Option C is misleading. While the department regulates insurance companies, it does not guarantee policies against insolvency. Option D is also incorrect. The coverage limits are typically determined by the insurer based on underwriting criteria and client needs, not mandated by the department. Question 12. Policy structure and components. Which of the following components is essential in a term life insurance policy to clearly outline the terms of coverage? A. The application form submitted by the policyholder. B. The declarations page, which summarizes key policy details. C. The endorsements section, which lists optional riders. D. The claims processing guidelines provided at the time of sale. Answer: B. Explanation. The declarations page is a critical component of a term life insurance policy, summarizing important details such as the insured's name, coverage amount, premium amounts, and policy term. This page serves as a key reference for both the insurer and the policyholder. Option A, one necessary for underwriting, does not outline the terms of coverage. Option C contains additional options but does not provide the fundamental terms of the base policy. Option D is relevant to the claims process but is not part of the policy structure. Question 13. Premium calculation and payment. When calculating premiums for term life insurance, which factor is most influential in determining the final cost? A. The insured's marital status. B. The length of the policy term chosen. C. The insurer's marketing strategy. D. The insured's social media presence. Answer: B. Explanation. The length of the policy term chosen is a significant factor in premium calculations. Longer terms typically result in higher premiums due to the increased risk of payout, while other factors like health and age also influence premiums. Option B is the most direct answer related to the structure of term insurance. Option A may have some impact but is less critical. Option C is not directly related to individual premium calculations, and option D is irrelevant in this context. Question 14. Claims process. In Ohio, what is the typical timeline for an insurance company to process and pay out a term life insurance claim once all required documentation has been submitted? A. Within 30 days of receiving the claim. B. Within 60 days as long as all information is accurate. C. It can take up to 90 days depending on the complexity of the claim. D. There is no specific timeline. Claims can take as long as necessary. Answer A. Explanation. In Ohio, insurers are required to process and pay claims promptly, typically within 30 days of receiving all necessary documentation. If a claim is denied, the insurer must provide a written notice explaining the reasons for the denial within a specified time frame. Option B does not reflect the standard practice for timely claims handling, while option C may apply to more complex claims but does not represent the norm. Option D is misleading. There are regulatory expectations for timely processing. Question 15. Underwriting and risk assessment. Which of the following best describes a preferred risk classification in term life insurance underwriting? A. Individuals who are likely to pay higher premiums due to health issues. B. Individuals who have a higher likelihood of needing coverage in the short term. C. Individuals with favorable health conditions and lifestyle choices who may qualify for low premiums. D. Individuals who are covered under a group insurance plan rather than an individual policy. Answer. C. Explanation. A preferred risk classification refers to individuals who demonstrate favorable health conditions and lifestyle choices, allowing them to qualify for low premiums. Insurers assess risk factors like medical history, lifestyle habits, e.g., non-smoking, and overall health to determine this classification. Option A describes substandard risks. Option B is inaccurate as it conflates risk with coverage duration, while option D pertains to group insurance, which is distinct from individual classifications. Question 16. Market trends and challenges. What is a significant trend currently influencing the term life insurance market in Ohio? A. Decreasing demand for term life insurance products due to a rise in permanent policies. B. Increased competition among insurers leading to low premium rates. C. A shift towards digital underwriting processes and online policy management. D. A significant reduction in state regulations governing term life insurance sales. Answer. C. Explanation. The shift towards digital underwriting processes and online policy management is a significant trend impacting the term life insurance market. Insurers are increasingly adopting technology to streamline applications and improve customer service. Option is incorrect as demand for term policies remains steady, often complemented by permanent policies. Option B may be true in some areas, but is not a defining trend across the board. Option D is misleading, and while regulatory changes occur, they do not typically result in a significant reduction in oversight. Question 17. Critical thinking abilities. An insurance agent is faced with a situation where a potential client has been declined coverage due to a serious medical condition. Which of the following actions is most ethical and beneficial for the client? A. Suggesting they seek coverage from another insurer without further discussion. B. Advising the client to apply for a guaranteed issue policy with no medical underwriting. C. Discussing potential policy options that might include exclusions or higher premiums. D. Encouraging the client to improve their health before seeking coverage again. Answer. C. Explanation. The most ethical and beneficial action is to discuss potential policy options that include exclusions or higher premiums, as this provides transparency about available alternatives. The agent should help the client understand their options despite the initial denial. Option A fails to provide support and guidance, while option B may lead to inadequate coverage without considering the client's needs. Option D, while well-intentioned, does not provide immediate assistance in obtaining necessary coverage. Question 18. Practical applications. Which of the following strategies is most effective for assessing a client's need for term life insurance coverage? A. Conducting a quick interview to gather basic information about income and debts. B. Using a comprehensive needs analysis that includes evaluating future financial obligations and dependents' needs. C. Advising clients to purchase the maximum coverage available regardless of their situation. D. Focusing solely on the client's current age and health status as the basis for determining coverage. Answer. B. Explanation. Using a comprehensive needs analysis is the most effective strategy for assessing a client's need for term life insurance coverage. This approach evaluates various factors, including future financial obligations, the number of dependents, and overall family needs. Option is insufficient for a thorough assessment. Option C could lead to unnecessary coverage and financial strain. Option D neglects essential elements of financial planning that extend beyond age and health. Question 19. Ethics and professionalism. What is the primary ethical obligation of life insurance agents when providing advice to clients? A. To ensure that they sell the highest value policy regardless of the client's needs. B. To provide unbiased recommendations that align with the client's best interests. C. To focus primarily on policy features that generate the highest commissions. D. To keep their clients unaware of potential exclusions in their policies to maintain sales. Answer: B. Explanation. The primary ethical obligation of life insurance agents is to provide unbiased recommendations that align with the client's best interests. This includes considering the client's financial situation, family needs, and long-term goals. Option is unethical as it prioritizes sales over client welfare. Option C also misplaces the focus on commissions rather than client needs. Option D is unethical as it fails to uphold transparency and honesty in the sales process. Question 20. Financial planning. Mr. Thompson is considering a term life insurance policy to ensure his children's education is funded in case of his unexpected death. Which of the following factors should he prioritize when selecting the term length? A. The age of his children and their expected college start date. B. The minimum term available to reduce premium costs. C. The length of time until his mortgage is paid off. D. The average life expectancy in his community. Answer A. Explanation. Mr. Thompson should prioritize the age of his children and their expected college start date when selecting the term length. This consideration ensures that his coverage adequately protects against the financial impact of his death during a critical period for his children's education. Option B does not account for specific family needs, while option C, although important, may not align directly with educational funding. Option D is less relevant as it does not directly correlate with the financial planning necessary for his dependents. Question 21. Policy types. Which of the following is a characteristic feature of a level term life insurance policy? A. The premiums increase every year. B. The coverage amount decreases over time. C. The premium and coverage amount remain constant throughout the policy term. D. The policy converts automatically to whole life insurance at the end of the term. Answer: C. Explanation. A level term life insurance policy is characterized by a constant premium and coverage amount throughout the policy term, making it predictable for the policyholder. Option A describes annual renewable term insurance, while option B applies to decreasing term policies. Option D is incorrect. Level term policies do not automatically convert to whole life insurance unless explicitly stated in the contract. Question 22. Legal considerations. Under Ohio law, what is the minimum grace period allowed for the late payment of premiums on a term life insurance policy? A. 10 days. B. 15 days. C. 30 days. D. 60 days. Answer: C. Explanation. Ohio law mandates a minimum grace period of 30 days for the late payment of premiums on term life insurance policies. This grace period allows policyholders to maintain coverage without immediate loss if they miss a payment. Options A and B do not meet the legal requirements, and while D is longer than necessary, it is not the minimum standard. Question 23. Policy riders. Which of the following riders is commonly added to term life insurance policies to provide additional coverage? A. Accidental death benefit rider. B. Guaranteed insurability rider. C. Waiver of premium rider. D. All of the above. Answer: D. Explanation. All of the mentioned riders can be added to term life insurance policies to enhance coverage. The accidental death benefit rider provides extra benefits if the insured dies due to an accident. The guaranteed insurability rider allows the insured to purchase additional coverage at specified times without proving insurability. The waiver of premium rider ensures that premiums are waived if the insured becomes disabled. Question 24. Underwriting principles. Which of the following factors is least likely to be considered during the underwriting process for term life insurance? A. The applicant's occupation. B. The applicant's lifestyle habits, e.g. smoking. C. The applicant's family medical history. D. The applicant's social media activity. Answer: D. Explanation. While factors like occupation, lifestyle habits, and family medical history are critical in assessing risk during the underwriting process, an applicant's social media activity is generally not a standard consideration. Underwriters focus on quantifiable risks that can impact mortality rates, making option D the least relevant factor. Question 25. Conversion options. What is a significant benefit of a convertible term life insurance policy? A. It allows the policyholder to convert the policy to a whole life policy without undergoing additional underwriting. B. It automatically pays out double the face amount if the insured passes away within the first year. C. It offers low premiums compared to traditional term life policies. D. It guarantees coverage until age 100. Answer A. Explanation. A convertible term life insurance policy allows the policyholder to convert to a whole life policy without the need for additional underwriting, making it advantageous if the insured's health declines. This feature provides flexibility and security. Option B is not a standard benefit of convertible policies. Option C is misleading as convertible policies may have higher premiums due to their flexibility. Option D is incorrect as convertible term policies do not guarantee coverage until age 100. Question 26. Beneficiary designation. Which of the following statements is true regarding the designation of beneficiaries in term life insurance policies? A. Only individuals could be designated as beneficiaries. B. A policyholder can change beneficiaries at any time, subject to contractual limitations. C. Beneficiaries do not need to be named for the policy to be valid. D. Only primary beneficiaries can receive the death benefit. Contingent beneficiaries cannot receive any payout. Answer B. Explanation. A policyholder can typically change beneficiaries at any time, provided there are no contractual limitations or legal restrictions. Option is incorrect as entities like trusts and charities can also be beneficiaries. Option C is misleading. While a policy can be valid without naming a beneficiary, it may result in the death benefit going to the estate instead of specific individuals. Option D is false. Contingent beneficiaries can receive payouts if the primary beneficiary is unavailable. Question 27. Premium payment methods. Which of the following premium payment methods typically results in lower overall costs for a term life insurance policy? A. Monthly payment plan. B. Annual payment plan. C. Semi-annual payment plan. D. Quarterly payment plan. Answer B. Explanation. An annual payment plan usually results in lower overall costs compared to monthly, semi-annual, or quarterly plans. Insurers often charge extra fees for more frequent payment plans, making annual payments more economical over the policy term. Option incurs higher costs due to payment frequency, and options C and D also lead to increased total premiums. Question 20. Policy termination. Which of the following is not a valid reason for terminating a term life insurance policy? A. Non-payment of premiums after the grace period. B. The insured reaching the end of the policy term without converting. C. The policyholder deciding they no longer need the coverage. D. The insurance company offering a low premium to the policyholder. Answer D. Explanation. A policy cannot be terminated simply because the insurance company offers a low premium to the policyholder instead. This scenario could lead to policy adjustments or new applications. Non-payment of premiums after the grace period. A. Reaching the end of the policy term without conversion. B. And a policyholder's personal decision. C. Are valid reasons for termination. Question 29. Tax implications. What tax implication typically applies to the death benefit of a term life insurance policy in Ohio? A. The death benefit is subject to state income tax. B. The death benefit is generally exempt from federal income tax. C. The death benefit is included in the deceased's taxable estate. D. The death benefit is subject to capital gains tax. Answer B. Explanation. Generally, the death benefit of a term life insurance policy is exempt from federal income tax. While it may be included in the deceased's taxable estate, option C, it is not subject to state income tax, option A, or capital gains tax, option D. Understanding these tax implications is crucial for policyholders when considering the financial impact of life insurance. Question 30. Policy exclusions. Which of the following is a common exclusion found in term life insurance policies? A. Death due to a pre-existing medical condition after the contestability period. B. Death due to an accident. C. Death due to natural causes after the policy has been active for more than 2 years. D. Death resulting from acts of war. Answer D. Explanation. Many term life insurance policies commonly exclude death resulting from acts of war. Other exclusions may apply, but accidents B and natural causes C typically do not fall under exclusions if the policy has been active for the required period. Option A may apply during the contestability period but is less relevant post-period.